Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Jeremy Allaire, CEO of Circle, to discuss the importance of the digital dollar in the APAC region to unlock new economic opportunities. Jeremy, it's great to see you. Welcome to TradeTalks.
Thank you.
Let's talk about the opportunities in APAC and how it represents a growth market.
Yeah, absolutely. So, there's sort of a couple key pieces to this. I think the first is the digital asset market itself, which is its own kind of industry and market. Asia's been very fundamental to that market, and digital dollar stablecoins are core to just the functioning of those markets. Digital cash, the digital cash instruments of trading markets, investing markets, all these, USDC plays a really big role in that, and so we want to, at a starting point, just make sure that we've got great infrastructure here to serve the really broad, regional demand around digital assets. So that's one kind of key piece of it. The second, though, is, the dollar continues to remain the preeminent currency of cross-border trade and settlement. There's an enormous amount of cross-border flows that happen, and stablecoin infrastructure becomes a really powerful way to enhance those cross-border applications, those remittance applications, and so having a well-regulated digital dollar that can be issued and distributed, under a regulatory supervision like that we have here in Singapore, creates a foundation for all kinds of fintechs, financial institutions, commercial firms, consumer internet firms to be able to start to use this infrastructure as a more efficient way to conduct, financial activity on the internet.
So it sounds like USDC, it really is a pillar of APAC's thriving fintech ecosystem.
I think so, yeah. I mean, what we're finding on a global basis, but certainly here in Asia Pacific, is, fintechs that have built up in a given region or country want to connect their ecosystems globally. And so a digital dollar like USDC can play a really important role in enabling those transaction flows to happen between their ecosystems and the rest of the world. And sort of like when in the early internet we all had our own email systems, and then the internet mail protocols made it possible for us to send emails to each other no matter what system we used. And so dollar stablecoins like USDC can be that kind of connective settlement mechanism to enable different fintech apps to talk to each other and settle transactions between each other.
Right, but of course the regulatory environment is a challenge. So what is the importance of regulatory clarity to bring fintech innovation to the masses?
Well, it's critical, and in our particular area of stablecoins, actually Singapore has been an early leader on the global stage in thinking about stablecoin regulations. And right now they've issued their framework for stablecoin regulations. Circle has become a regulated stablecoin operator now in Singapore, and there'll be new rules that we'll have to comply with in the future. But all around the world, and in Asia specifically, Japan recently finalized their stablecoin regulations. Hong Kong is issuing guidelines and is expected to put in force their stablecoin regulations in the first half of next year. Singapore, the same thing. And so Europe, UK, all these major financial market centers are basically putting in place very clear policies on how stablecoins can be used in the financial system. So that's critical. So once you have that regulatory clarity and you have those laws in force, then the fintech ecosystem and even traditional banks will feel comfortable using this technology as a way to move money around. And so it's critical, it's happening, and it's, I think, going to be a huge catalyst for the adoption of stablecoins like USDC as we go into next year.
And it's so interesting to learn about this because TradeTalks, we're a US-based audience and we tend to think very US-centric, and of course we have legacy financial institutions that we do our banking and e-commerce with, but the fact of the matter is local economies are being built up via stable coins. It is necessary for cross-border payments, even sending money back and forth to families. Billions of people are operating on this. This is a real concept here.
Yeah, it is. I mean, one of the fascinating things that we've seen, people ask about, like, what are some of the growth drivers and where's the activity happening with USDC, and a major driver of activity right now is in emerging markets. People want to store value in dollars. They want to store value in digital dollars. Their local currencies and banking systems aren't as effective in some ways. And there's sort of the power of a digital dollar is you can hold it in the palm of your hand, so to speak. You can transmit it peer-to-peer with people anywhere in the world, just like you can send a text message. And so it really it's very empowering, right, to households to be able to store value in dollars, or SMEs to be able to transact with different parts of their ecosystems, whether they're in Africa or Latin America or China or wherever. The sort of growth in dollar stablecoins has really helped individuals to be able to secure their wealth and more easily and efficiently move money without having such a toll on those transactions that you've historically seen in things like cross-border remittances.
Yeah. All right, Jeremy, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.